Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for April 27th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. This is something I talked about here recently, is watching to see what the reaction is going to be like at the top of this key range here, 23.8875. The low here, 23.1775. That was the impulse move that we saw. 23.53s, 54s have been a major sticky pivot for the market here, and now we're testing the edge up here. And this is what I mentioned before. It may not just be a hit and reverse. It may take a day or two or three to build up the necessary energy to get this thing either coming back toward the 53s and perhaps across the range into 17s, or this price find a way to push through 23.95s, 2400s and expand. At the moment, we've got a large trading range that's developed. You see a nice D-shaped profile that is built out as well. So the early idea is to watch for signs of rejection for a return back toward 23.71 and perhaps a gap fill back toward the 23.45s. So that's going to be something to watch out for here. That's the midpoint of the previous session's range. That is a rejection day right there. And if you look at the midpoint and come right back toward 23.8875s, that's about the zone right there where bears are going to look to defend here this morning, right into 87, 88, 89. Right in that area, look to trap and perhaps run the stops below 23.80. That's going to be the idea. If there's any acceptance or failure to reject those 88, 89s, then we could be looking at a further development of that range from 80 to 95s. But overall, this could be a short-term topping pattern that leads at least to a pullback of some sort back toward 23.71s, perhaps 53s, and into those 45s for a gap fill close. So we'll be watching this very closely right off the midpoint of the previous session's range for signs of rejection and perhaps a return back down. Now, one thing I would say here is this is the 5-period average here in 5-period range. So right here, this is big. This says that the current 5-day range from this low, 1, 2, 3, 4, 5, that range is very wide compared to average. When that happens, you typically see the range shrink a bit. For example, over here, when it got really wide, you start to see it shrink as the market kind of digests that recent big move. So we could see that again as this thing builds out after this major move we've seen. We could see it quietly trade here and build a little bit of energy before the next move. All right, let's look at one thing here. I don't usually do this, but let's look at XLF. I found XLF very interesting after yesterday's session because we have great market structure here. Look at that 24 right across the way, major LVN there. Price tried to hold above that prior price distribution and failed. And when it failed here, it's created the distribution or traded back within the previous distribution. And right now you're seeing a rejection off of 24s. You're seeing the rejection right at the LVN, and that's typically a sign that you're going to come back and retest the opposite edge of the range. And if this is going to be the case for XLF, it may weigh heavily on the ES, and that could be further fuel here as this thing perhaps returns back down the range. All right, let's take a look at the ES and the intraday time frame for a moment. Bringing this thing back to the intraday over here. What you'll see right now, again, this is the 88 quarter. That's the previous session's midpoint. So this is the pivot range right here. That's the midpoint of the previous session. That's also where closing VWAP is, closing value. R3 is right near that area as well. So right there, that's a confluence of key inputs here where if price pushes into that zone, you may see some sort of rejection or an attempt at defending that area by bears. The first return would bring you back to 83.84, as that is 1 and 5-day VPOC with a shot at rotating back below value into 23.80. Any run of the stocks below 80 opens up much lower prices. All right, let's take a look at crude oil. Here's a look at crude, and if we bring it out to the daily time frame here, you'll see right here, crude yesterday, the previous session, what I mentioned was watch for signs that price can squeeze beyond 49.63. That's the previous week's close, that white dotted line. We were looking for signs to buy at the opposite edge, found an absorption signature, and was able to negotiate that move up. Now, one thing that happened is right at 50.20, that's where the major rejection occurred, and that's our key level. That's the area we mentioned to sell on Monday morning. If price goes into 50-20, look to defend it. And so far, that's been the major area of resistance to watch. That's the bottom of the weekly pivot range after a down moving market. Big high range week the previous week, and right now more of a trading range developing. Now the stops are clearly above 50-20 now, but clearly this market has been down. So we have a nice little clear range to watch, 48.80 on one side, 50-20 on the other. We could see further development within that range, but overall the market still looks like it wants to continue pushing downward, especially if 50-20s continue to hold. But above 50-20 could squeeze very, very nicely back toward 52.5, perhaps beyond. Let's take a look here at the intraday time frame for crude. So right now we're seeing a push below the previous session's close. That's where bears are currently defending. The previous session we had a great absorption signature that developed here right at the open, or right heading into the open, and that led to a great move. And again, it ran right into 50-20. Major resistance, sharp rejection, and then another absorption signature built out on the top that led to a reversal back down. So right now we have a great trading range from 48.80 to 50-20, and many reversals have already been seen from the lower edge of this range. So we'll be watching for signs that this area may hold again for a shot at pushing back up. But again, this is a clear range where the edges should be defended. So any push up here still to be defended by bears. Any squeeze above 52.20 really opens up a swing move next week. One thing to keep an eye on right here, bears defending VWAP and the previous session's close right in this zone. So the buy stops are above 49.30. So if there's any rejection here, it could run those stops and retest 49.63. That could be a short-term trade to watch out for. Let's take a look at gold futures. Here's a look at gold. Let's go to the higher time frame. In the higher time frame gold, what you'll notice here is that price held the 1263s and has bounced several days off that zone to varying degrees. That's usually what you would expect after price pushes through that resistance as it did here before. Major push through that area. So when price comes back, there's a tendency for bulls to defend that area. At the moment, we've stuck down here for about 2.5+ days, and we haven't really seen the lift just yet. So we'll see if bulls start to get paid. Otherwise, everybody that got in here off 63s may be left holding the bag as this thing continues to roll back toward 1240. So this continues to be the major edge to watch, 1263s. Back above the previous close, or previous low rather, is what I mentioned before. Price needs to get above those 75s to start paying those bulls that are defending 63s. On an intraday basis, here you can see a downtrending market. VWAP being offered so far at every turn. The only problem is right now there's a clear bottom here, bears defending here. If there's any rejection of these lows, the stops could come out above 1267. That opens the door to retesting 70 to 71. Lastly, let's take a look at 6B. Here's a look at 6B. The higher time frame, what I mentioned before on 6B was that there was a shot to see major expansion soon, given the tightly coiled price action we've seen. You can see right here prices have held so far above support. They're holding the other edge, but they're trying to make a little bit of a move up. But this could be the day here where we either reject or we start to push out. And so testing this edge right here first, you got to be very careful. If there's any rejection here, the likelihood is that you run the stops in the opposite edge. So keep an eye on this previous high and 129s here. Any push through that zone starts to open up expansion. But as I mentioned, when you have a tightly coiled range like this, and it's very noticeable on the ADR indicator, the first breakout can oftentimes be a false one, and then it could lead to a major reversal in the opposite direction. So we have to judge right now whether that's going to be the case or we're going to see follow through. So watch this. We could be gearing up for that expansion at some point here fairly soon. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.